Hi neighbor. Today we're going to be talking about understanding the rise in mortgage rates. Today on a Realtor's Life News Update. Hi neighbors. Before we get started, if you or anyone you know is interested in buying or selling and want to know how to get that done in today's market, feel free to contact me. My information is at the end. And don't forget to follow me on Facebook and Instagram, or you can subscribe to my YouTube channel for the latest tips, news, and updates. Freddie Mac releases the results of their primary mortgage market survey every Thursday. This report reveals the most recent movement in 30-year fixed mortgage rate. Last week, the rate was announced at 3.01%. It was the first time in 3 months that the mortgage rate surpassed 3%. In a press release accompanying the survey, Sam Cater, chief economist at Freddie Mac, explains, mortgage rates rose across all loan types this week as the 10-year U.S. Treasury yield reached its highest point since June. The reason is because there has been a very strong relationship between the U.S. Treasury yield and the 30-year mortgage rate over the last 5 decades. This graph shows that relationship. The relationship has also been consistent throughout 2021, as evidenced by this graph. This graph also reveals the most recent jump in mortgage rates was preceded by a jump in the 10-year Treasury rate that you can see in the red circle. So what impacts the yield rate? According to Investopedia, there are a number of economic factors that impact Treasury yields, such as interest rates, inflation, and economic growth. Since there are currently concerns about inflation and economic growth due to the pandemic, the Treasury yield spiked last week. That spike impacted mortgage rates. So what does this mean for you? Cater continues, we expect mortgage rates to continue to rise modestly, which will likely have an impact on home prices, causing them to moderate slightly after increasing over the last year. Nadia Envelou, senior economist and director of forecasting for the National Association of Realtors, also addresses the issue. Consumers shouldn't panic. Keep in mind that even though rates will increase in the following months, these rates will still be historically low. The National Association of Realtors forecasts the 30-year fixed mortgage rate to reach 3.5% by mid-2022. Bottom line, forecasting mortgage rates is very difficult. Mark Fleming, chief economist at First American, once quipped, the fallacy of economic forecasting is don't ever try and forecast interest rates. And more specifically, if you're a real estate economist, mortgage rates, because you will always inevitably be wrong. If you're either a first-time home buyer or a current homeowner thinking of moving into a home that better fits your current needs, keep up with what's happening with mortgage rates. It may very well impact your decision. So, do you think interest rates will rise? Let me know in the comments your thoughts. And remember, it's about you and the place you call home. Thanks for watching a Realtor Life News Update.